Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is how you can stay safe while still trading options. A lot of people think options is much more riskier than stocks, but here I'm going to share with you some insight on how you can make it safer or customize it based on your own personal need. So stay tuned. I'm going to share with you this insight right now in this video. All right, so as you dig deeper into options, you probably recognize that there's a lot of learning that you need to do to be able to understand them. And although many things out there, many videos out there talk about buying calls and buying puts and how to kind of trade those kinds of things, but it's not really the most effective and really not the wisest approach to trading options. And in this case, people, might try it out for a bit and then they lose and they have some losing times. And then they say, options just don't work. And what I want to share with you is kind of how you can customize some strategies when it comes to trading options and how you can be a little more safe or safer as you trade the option contracts. So I'll share with you kind of 2 to 3 levels of being safer, and that way you get a little insight on what it's all about. So anyways, the reason I'm doing this is because we have a course coming out, so we're going to focus back on the basics. If you want to check that course out, it's going to be on learn.com. You can also go to our Traders Fly website and check out the freebies. That way you get notified as it's released. So this course is really set up for the basics of options, and we've got quite a few videos. It's about 11 hours long, 36 videos in total, reworked from the ground up. My first version had 3 DVDs because we were doing it on DVDs and back in the day. Now we've reworked it completely from the ground up. So there's much more great material. It'll be released November 25th, so by now should be kind of released already, so you can check it out here, but I'm recording this obviously a little bit earlier. So go to the website there and just check it out, and you can purchase that course as you go through. And we're releasing here the first batch of videos here, November 25th, then December 2nd, and then December 9th. And you can get kind of like a Black Friday deal or special, $50 off. Just sign up to the newsletter list to get a little coupon code. You can also use the live chat. Or the coupon code will be actually right at the top right there when you're purchasing the course. So anyways, we're just doing it in batches here, and we're going to cover quite a bit there, from risk profile pictures to executing orders and much more. So anyways, let's take a look at this, and we're going to share with you some insight. So if I'm looking to purchase a stock, and let's just say, for example, Tesla. Because a lot of people love, Tesla, or they want to invest in Tesla. And you're thinking, hey, well, this stock has been running up the last couple days. Boom, look at that explosion. It's just been moving higher. Typically, the approach that people would say is, well, just buy a call. But the problem with the call contract, let's say you're going in and you want to buy and purchase a call. Let's load it up. This, of course, is paper money, but I'm just showing it as an example. If you buy a call, here's kind of the downside. Let's say I choose this call, the 560, just as an example. When you purchase that call, you have a theta decay problem, which means that, hey, you're losing 47 bucks a day. That's quite a bit to lose from, just time value. So you have this curve, which means if that stock goes up, you make money. But if it stands still a few days later, you're losing $50 a day and you'll be down much more. So that white line continues to get closer to the green line, right? Green line's expiration, white line is today. So not only does it have to kind of move up, but it has to move up enough to offset the theta problem or the time value loss that you're going to have. So long story short, this is not the wisest approach. So what's the better approach? Well, let's say you go ahead and you sell a put instead. Also a kind of a bullish strategy if you're assuming that stock will go up. And what I can do is go ahead and sell, but now here's the cool kicker part. You're getting $44 of theta positive. So every day that white line now gets closer and closer to the green line. So if you look at your profit and loss right here, here's the white line. Let's put it all in frame. You can see that white line continues to get closer and closer. So that's really what you're doing, and that's the better approach to kind of trading options. Now, what's the downside to this? Well, the downside is if this thing does go against you, let's say the stock pulls back, well, you could get assigned 100 shares. If you're dealing with one contract, you can get assigned 100 shares. One contract controls 100 shares. So that's kind of the problem when you're dealing with options. But here's the awesome part. Stock stands still, you make money. Stock goes up, you make money. Stock pulls back a bit, you still make money. On the flip side, if you're trying to do a bullish strategy, and let's go back to our 560 call that we're buying. Okay, in this case, stock stands still, you lose money from time decay. Stock pulls back, you lose money. Stock moves up a little bit, you lose money because of the time value. It has to move up quite a bit. So when it comes to selling, it's typically a better approach, but the issue is that if it pulls back, you have to actually put up the stock, or, you'll get the stock put to you at the strike you sell, which is, in this case, 440. So if the stock is at 0, somebody can give you that stock at 440, meaning you'd have to buy it back at 440, and that's where the significant losses come in. So that's a little bit of an issue and problem. And here, when you look at it, 440 compared to the stock chart, that's not that far. That's only right down here. That's not a big movement. So when you kind of look at that and you start evaluating this, and let's just kind of pull it up here on the chart on Tesla. Let's see here. So here we've got, let's go to a daily, and we go kind of at the, 440. So that's pretty close, I'd say, right? But what if we can get under at around, let's say 360? So if I could go somewhere around here, that, you might feel a little bit safer, right? So there's 440. What about 360? So in that case, somebody puts the stock to me at 360, I'd be much more comfortable because it'd be much lower than where it is. So what I could do is in fact move this. So let me analyze this trade so you can see it. And there's our 440. Let's go ahead and move that to maybe about a 360. So can I go ahead and sell something at 360? Sure I can. However, the problem is, look at the difference. So now I'm going to go ahead and add a little price slice marker so you can see. So here's kind of our break-even zero line at the 360. And then here is our breaker mark on the other one, the 440. Okay, so you break even at 409 in this case. That's why it's not 440, because by the time you break even with the time value. So here you can see the difference between those two. So the question is do you want to be at this point or at this point? Now, what's the trade-off? You can go wider and be safer. Well, the trade-off is that you'll make less money. This one you're making $31.55. Multiply that times 100. And this one you're making $10 per contract. So in this case, you're making $1,000 at expiration. And in this case, you're making $3,000 at expiration. But the risk is greater, right? You're closer. So what's great about options is that you can kind of control your risk. You can get wider and be safer. So that's the way that a smarter approach is to trading options, is that you can just go wider. Now, here's the other thing. Depending on what you want to do, the problem still here is, so this would be part 2 of kind of this conversation, is you still could get that assignment, even if you do go wider. Let's say you went wider right here. Well, how do you protect yourself? Well, you buy a put further down. So I sell something for 10, and let's just say analyze the opposite trade, and I get something at 340. And I buy some protection at 340 now. And now what that does is it sets up a little bit of a strategy. This is kind of like a vertical, it's called. So I get 360 and a 340. Let me see here. What do I got right now? Go to today, and then we unlock the price. The contracts look a little funky, but that's just because the way I'm splitting it up. But basically, think of it. You buy something for $9 and you sell it for 10. That's the way it works. So you're selling something that's worth more than what you bought it for. And that creates this spread. So that way stock stands still, you make money. Stock goes up, you make money. Stock pulls back a bit, you make money. If it really tanks to zero, at least you've bought some protection there down below. Now, let me show you what this kind of looks like at maybe as a single spread. So we'll sell a vertical. And now this will be a little bit better because it'll all be a single trade, which now will line it up. You can see there's the zero line. Break even is kind of at zero, right? You start out kind of at zero. So there now, if it pulls back, you make money up to this point. You can still make your full amount. If it stands still, you make money. Goes up, you make money. So That's a smarter approach. And let's just say, hey, this was too close. Well, what could you do? Let me go ahead and mark this one for you. So you can say, hey, there's the 0 line, break even. Let's say I decide to go wider. This is 360. And let's say we go to maybe 350. So you can see now at the new line right here. Here's the new line, and here's kind of the old line. So you can see it's in a bit tighter. So that's kind of the difference, is you can spread them out as wide as you kind of want. Obviously, the trade-off though is that you make less money. So from the closer one, you make $2.27. From the other one, you make $1.67. So what does that mean? In this case, I make $227. If I decide to go wider, I make less. I make $167, but at least I'm making $167, but I'm safer. So it's kind of like, hey, how close or wide do I want to be? And the closer you are, the more you can make. But it just shows you that you can control your risk and still stay safe, because safe to you is different than safe to other people. So anyways, these are kind of the concepts we'll talk a little bit about in this options foundation course. This is the proper way to kind of get into options, getting a good solid foundation. So definitely check this out on our Rise, the number 2, LEARN website. So Rise to Learn. And then you can also check out the tradersfly.com website. And once you're on the homepage there, we'll have like a button right here. You can just click and it'll take you to the course as well, where you can purchase this course. And don't forget, we have kind of a coupon code, $50 off, which you can see right at the top of the screen and the page. It'll put it on there when you're doing your checkout. So we'll put kind of that bar there, and we'll even put it right there on the sales page to use it right away. So for those of you that are early, that have been with us for a while, checking the videos, keeping in touch, it's kind of a way to kind of contribute, give back up until the holiday season. So December 25th, it is over. So the sale will be over, just like any normal store. Once it's done, the sale is done. That's it. So it just kind of reminds you, up until Christmas, we do have that discount and break. If you want to take advantage of it, get a good solid foundation for the new year for trading options, spreads, kind of in a basic way to be able to build you the right foundation for evolving in your education in the future. Because if you don't have the right foundation, you don't have the right concepts, and you try to go to the advanced things, you're going to be lost. So if you're new to trading options, if you don't understand what options are, if you want to get a good understanding about them, to be able to have some building blocks for the future, check that out. You can also get a discount coaching session, or even check out some of the mentoring things that I do with other people as well on those pages. So thanks again. Remember, do what you love, contribute to other people, but most importantly, live life abundantly. Hope to see you in the course.